My name is Vera Liu. I'm Executive Director of Investments at KingSett Capital. KingSett is a Canadian private equity real estate firm. We have offices in Toronto and Vancouver, where I'm based out of, and Montreal as well. And we invest across all major asset classes and along the entire capital stack across both equity and credit strategies. So investor priorities have really shifted towards asset quality and cash flow resilience. And as we've seen more volatility in capital markets, investors are spending more time focusing on what actually holds up. So in-place income, tenant quality, how do assets perform across different cycles? And there's just less appetite today for business plans that rely on either perfect market conditions or unrealistic timing. And at the same time, there's a greater focus on execution and risk management. So that means investors want to understand, how is downside risk considered and protected, and how are decisions going to be made once capital is deployed. It's less about chasing very aggressive returns, and it's more about making sure investments are positioned to perform consistently through the cycle. So I think shifting economic conditions don't necessarily eliminate investor confidence, but they do impact how investors behave. And during periods of market volatility, that's going to tend to slow decision making and increase scrutiny. But confidence returns when investors have a clear view of risk and downside, and deals that are well structured, grounded in real cash flow, and not overly dependent on perfect market timing are going to continue to attract interest. So one of the biggest hurdles in Vancouver is just that it is a very competitive market. We're dealing with limited supply, we're in a geographically constrained location, we have very strong long-term fundamentals, and there's a very deep pool of experienced local investors, national institutional investors, and international investors as well. So this is going to tend to push pricing up, and there's very little margin for error, especially for new entrants. And I think what we find here, land costs tend to be high, construction costs are high, there's a lot of regulatory complexity. So if there's missteps in sort of multiple categories, that can really magnify and really dampen some of your returns. So I think especially in uncertain cycles, I guess what we'll call it, this market does tend to reward local expertise and discipline. So in both sectors, we're really seeing a much clearer separation between assets that are well located, well leased, and operationally strong, and those that are more challenged. So, as a result, investment strategies are going to be more nuanced. It's less about broad sector exposure and more about owning the right property in that asset class, the right location with the right business plans. The biggest theme in Vancouver right now is just the gap between, very strong long-term fundamentals and near-term execution risk. We've seen rents in several sectors and several asset classes soften from peak levels, and that's put more pressure on underwriting and execution. But at the same time, supply is constrained. As I mentioned before, we're in a geographically constrained location, and long-term fundamentals and demand drivers are still strong. So, that supports a solid longer-term outlook. So I really think 2026 really comes down to discipline, realistic assumptions, thoughtful capital structures, and the ability to execute well.